All right, let's get right into it. Today, we're digging into Barrick Gold's third quarter earnings. And wow, this was a release that really sent a jolt of optimism through the market. It all boils down to one single massive number. Let's dive in.
So that one number I mentioned, it's this. $1.5 billion. Seriously, the entire story of this quarter, you can pretty much boil it down to that single figure. That is the record-breaking free cash flow that Barrick pulled in. And believe me, it's the number that has every single investor paying very close attention right now.
So, you might be asking, how on earth did they get there? Well, the interim CEO, Mark Hill, he kind of laid it out perfectly on the earnings call. He said, and I'm quoting here, higher gold production combined with lower costs and strong commodity prices drove record cash flow for Barrick in Q3. I mean, it doesn't get clearer than that, right? It's really the classic playbook for a mining company, but they just executed it flawlessly in a really strong market. Okay, so let's get into the headline numbers. This is where it gets interesting because the story wasn't really about the top line, it was all about the bottom line. This was a quarter where cash flow, well, it trumped everything else. Now take a look at these numbers with me, because this is where you see that divergence I was talking about. You see that revenue line? Yeah, it was a slight miss against what analysts were expecting. But, and this is a big but, look at the bottom half of this chart. Adjusted EPS, a modest but solid beat. And then you get to the cash flow numbers. Operating cash flow, a record high. Free cash flow, another record high. So what does this tell you? It tells you the market is smart enough to look right past the timing of a few sales and focus on what really matters, which is the incredible cash-generating power of this business right now. And you know what? Management didn't waste a single second putting that cash to work for their shareholders. I mean, they immediately announced a 25% hike to the base dividend. Think about that. They're bumping it up to 12.5 cents per share. That is a loud and clear signal of confidence that this level of cash flow isn't just a one-off thing. Oh, but they didn't stop there. Not even close. On top of that big dividend increase, they also tacked down a $500 million expansion to their share buyback program. So we're now talking about a total authorization of $1.5 billion. The message coming out of that boardroom could not be more obvious. We are returning capital to you, the shareholder, and we're doing it in a big, aggressive way. So that's the what. Now let's get into the how. Let's pull back the curtain on this cash flow engine and really deconstruct how they managed to pull off such a record-setting quarter. You know, it was really a perfect storm of positive factors, all hitting at once. On the one hand, you had the macro environment. Strong realized gold prices gave them this massive tailwind. But you can't just rely on the market. Internally, Barrick executed beautifully. They cranked up production volume, while at the same time, they were pushing their unit costs down. And on top of all that, they're getting smarter about their portfolio, with key asset sales like Hemlo and Tongon set to bring in another, $2.6 billion? That's just going to make an already strong balance sheet even stronger.
Now, to really get a handle on their cost discipline, you have to understand this one key metric, all-in sustaining costs, or what everyone in the industry calls AISC. Basically, it's the most complete measure of what it truly costs to produce one single ounce of gold. For Barrick, that number came in at $1,538 an ounce. Now you think about today's gold prices, that cost level means they are generating absolutely massive margins. That's the fuel for the fire of that record cash flow.
All right, so beyond the hard numbers, the analyst Q&A session was super insightful. It gave us a really clear picture of what management is focused on, and maybe more importantly, the key risks they're trying to navigate. So let's sift through the noise and find the real signal here. So, first up on the analyst agenda, you've got a new interim CEO at the helm. So naturally, the number one question was, what's the new focus? What's the plan for this new operational review? And the answer was, well, it was a classic back-to-basics approach. Management talked about a bottom-up review, which is all about stabilizing operations, especially at their core assets in Nevada. The goal here is pretty simple. Get predictive maintenance in place to make sure delivery is consistent, reliable, and predictable. No surprises, just steady performance, quarter in and quarter out. But look, let's be real. The most critical and frankly the most serious concern that came up on the call was about safety. Analysts wanted to know how Barrick is addressing the 3 tragic fatalities that, really overshadowed the quarter's strong financial performance. This was a major, major focus. And to their credit, management was very, very clear on this. They said this isn't just about changing procedures on a checklist. It's about culture and it's about leadership. The number one priority is getting more supervisors out in the field and dramatically improving how they recognize those fatal risk hazards.
The message was really that getting safety right, that's the absolute foundation. If you don't get that right, nothing else matters.
Okay, so finally shifting gears a bit to look at the future. Analysts wanted to know what's the path forward for growth, and they really zeroed in on the company's massive Fourmile discovery over in Nevada. And wow, management's answer here really tells you everything you need to know about their long-term vision. They did not hold back. They called Fourmile, and I quote, this century's most significant gold discovery. That's a huge statement. They are basically hitting the accelerator on drilling and development because they see this as a potential cornerstone asset for, well, for decades to come. Okay, so that brings us to the final segment, what we call the next call. This is where we give you our forward-looking outlook and our official rating on the stock based on everything we've just gone over. So here's our forward look for Barrick. First, for Q4, we expect that strong free cash flow to just keep on rolling, especially as gold prices stay high and those asset sales close. For the stock itself, we think this positive momentum should continue as the market really starts to digest this new narrative that Barrick is now a capital return story. The key catalyst to watch for? That'll be their year-end guidance, and of course any progress updates on that huge Fourmile project. And all of this, it leads us to our official rating. So here it is. Our rating is outperform, and the thesis is pretty straightforward. Barrick has hit a clear, undeniable cash flow inflection point. You combine that with their disciplined execution on the operations side and a really clear commitment to returning cash to shareholders, and well, that justifies a valuation re-rating from where it is today. And finally, as always, just a quick reminder, this is not financial advice.